Hey guys, hope we're all well. Recently, a lot of you have been messaging me on Telegram asking what time frames I'm using, how I'm getting certain trades. So today I wanted to go through a top-down analysis and just talk to you guys on the processes that I use for top-down analysis and what time frames I'm using. Also, I want to say a big thank you to everyone for the support and kind words that you've been giving me on Telegram recently and also on YouTube as well. It's been really nice, so thank you. So what I do normally when I do top-down analysis going into each day, check a weekly time frame and see if there's anything important on there. Normally you don't have to check it too much because it's only each week one candle is printed. So I looked here and I saw this wick was here, so that I wanted that to get taken out, but that was already taken out the previous day. And then also, so then I go from the weekly to the daily, and on the daily we had buy side liquidity taken out, and we have a daily fair value gap here. So my thought process now is we've taken out buy side liquidity. I want to see some sort of sell side liquidity taken out, or the daily fair value gap revisited, or visited, sorry, because that will act as a magnet for price to draw it into it. So that's all I'm doing on the daily. So then I move from the daily time frame to the 4-hour time frame. And on the 4-hour, what I can see is now, if I fast forward to the Asian session. Okay. So what I can see, this is the most recent low that was created. So that's where sell side liquidity will be resting, and it also happens to be where the daily fair value gap is. So that's already giving me confidence that price may go down to here. I'm also seeing these order blocks. So when price is going down there, I'll look at these as obstacles. So price may go here, hit the order block, go up a bit, go down, hit an order block, go up and down. So I'll mark those out and just to see the reaction that's happening there. Next, from the 4-hour, I'll go to a 1-hour time frame. Just mark out my ICT kill zone for London. That's 2 a.m. to 5 a.m. And now on the 1-hour, so this is where it's important. On the 1-hour, we've had a sweep of liquidity and a break in structure. So now we've taken out buy side liquidity and we've had a bearish break on the 1-hour. So now I'm expecting price is showing me actually that we are going down to possibly take out sell side liquidity. Then we've got the order block here as well that price can come back into and tap into, and then I'm expecting it to push lower. So from the 1-hour time frame, I'll go to the 15-minute time frame, and I'm waiting to see what's happening. So over here we can see that price went into the premium level, tapped that 1-hour order block, also a 15-minute order block here, and then we get a 15-minute break in structure. So now we've got the 15-minute break in structure, we have a fair value gap here, and we also have an order block here. So that's all I need to see on the 15-minute time frame, and it's in a premium level. So I'll wait for price to get into there before I do anything. So I'll check out the 5-minute as well just to see what's going on there. I can see there's not much there. There's a fair value gap in that area as well, the same where the 15-minute was. So that's just a little bit of confluence as well. So now that there's not much information on the 5-minute, I normally go to a 1-minute time frame after that. And I can see within here there are some highs where liquidity will be above these highs. So I'll wait to see what happens when price gets into this point of interest. So it consolidated for quite a bit actually. You will have got maybe tricked up here and taken some shorts, but remember we're waiting for price to come into the fair value gap or tap this order block. Alright, so I can see what happened was we tapped into the order block, we took out this high, so a bit of liquidity there, and we got a really bearish push down after, creating displacement. Basically a really big gap. So we've got two fair value gaps. Now normally I like to see a body break past the low. Now this low is pretty far away from anywhere there, and I can see that the gap is quite large, and everything on the higher time frame is showing me that price should go lower now. So I kept this as my break rather than just the sweep. What I was waiting for, or what I was wanting to enter, so this wick on a lower time frame is going to be an order block. So I don't have the seconds time frame, but it is an order block. It's a, I forgot the name that ICT says. It's some type of order block. So a reclaimed order block, that's it. So I was waiting for price to come back into there. So I was simply just going to enter here, and my stop loss was above that high, just in case it came into here and filled up this gap and tapped into the order block as well. So that was simply my trade that I was going to take. Well, I did take it. Price tapped me in nicely, and then it fell. Now the only thing that happened was I didn't end up entering here. I was just phone trading. I entered a little bit lower, somewhere about here, and then when price came back up, it tapped me out at break even, and then it started to drop. But what I did do, I caught another trade. So I caught a trade here was my entry. So how did I know to enter here? So I went to the 5 minute. I'm always changing time frames to see, is there something showing me? I could see on this time frame that we had a 5 minute order block, and we had a gap, fair value gap. So I knew this area would be a likely area to enter from. So I really just simply took the trade like this, put my stops there, and we can see that bearish structure is happening. So it's not just that there's a 5 minute order block there, it's the whole picture that we've painted. And then I was targeting lower prices. I also took another trade because what happened here, we had a break right there. So I'll mark it out. We had a break here, so showing me that we're moving bearish again, and we had the sweep here. Now my entry was, I simply just took this 50% of the fair value gap. So I entered there, and my stops was above the high, and again I was targeting lower prices. Okay, and you can see that price, as soon as it tapped me in, it just started to drop, which was really great. Now when I was looking for targets, what I actually did, because I was possibly seeing I was thinking it might retrace, in hindsight I really should have held it there, but I was happy just to take the profit, and I took it at the 1 hour fair value gap close. So it did cause a bit of a retracement, but then it dropped further. Alright, so going into, let's do another day, because we're going into this next day. Sorry. Alright, so we do the same process again. So we know we don't have to go to the weekly time frame, because there's not much information there that we would use. We can check the daily out just to see what's happened, and we can see again we've got the daily fair value gap. I like to do an analysis each day. I don't want to think the same idea that I had the previous day. Maybe something has changed, so I just start again from the top. So you'll see it's the same process. So I'll mark out that we had buy side liquidity taken. We've got the daily fair value gap that we haven't tapped into. I can see that we took out the previous day high and then we dropped a lot. So now after that, I'll go to a 4-hour time frame. And on the 4-hour time frame, there's really not much that's happening here. Like there's not much information. I can see there's a fair value gap up here, but given how bearish price is and that we haven't taken out any sell side liquidity, I'm not expecting price to retrace all the way back up there. So the 4-hour doesn't give me too much info. So now I'll go to a 1-hour time frame. On the 1 hour, what I can see is we have highs being respected. Here, the high got taken out and it was just a wick. So I look at that as a sweep on liquidity. And another bit of confluence that I'm using is I can see we had accumulation in this area. So accumulation, manipulation, tricking everyone that they're going one way, and then distribution. So then it's going down. So that was another bit of confluence. We have this. I'll mark out my ICT kill zones again, 2 a.m. to 5 a.m. New York time. And then after the 1 hour, I'm still seeing that we're bearish and my overall target is here. So then on the 15-minute time frame next, I'll have a look to see what's going on. And right now, I can't see too much. The next low is down here. And I'm pretty confident that price is going to move lower before that. So I want to be able to get into it. So I'll go to the 5-minute time frame now. And the most recent low is here. So once we break that, that will confirm for me that we're bearish. So waiting for that time. So there we go. We get the break here. So now we can confirm that we're bearish. We also got a stop hunt and a break. So this becomes a strong high. That's what I'll just mark out coming into the London session. So now we're in the London session. I can see that we've got this quite a large order block here. All right. So we've got this large order block here. I'm thinking that we could enter off. And I really just simply put my entry here, my stop above here, and I targeted that sell side liquidity and the start of the daily fair value gap there. And yeah, I just waited for price to come up into here. And then it consolidated a little bit in this area from memory. Yeah, consolidated a little bit. My rule personally, I only go to break even after 5-minute BMS. So I wasn't at break even yet, and then it dropped. So yeah, that was the entry there. If you would have maybe looked at a confirmation entry, maybe you would have taken something here at the fair value gap, put your stops here, and you would have been taken out. But you have to look, what do we have here? We have equal highs. Equal highs is liquidity. So if you, for whatever reason, if you took this trade, you now know why you got stopped out. It's because these equal highs here. Okay, so if you wanted to take the trade to be from here, oops, just to be safe to say that you got into the trade, sorry, from here, then you needed to put your stop loss here just to be safe, or at least above where this fair value gap is, in case it went to fill that and take that out. And again, we'll target, the target was here, the sell side liquidity and the daily fair value gap. And then you can see we had a really strong reaction pushing us up further after that. So that was a great spot to take profit at. And that would have been 4.3R, and the trades up here, I think holding till there was like 7R or 5R for one of them and 7R for the next. And these also could have been held all the way down to there, because that was our overall higher time frame objective. So yeah, my top-down analysis, I think it's best to keep it simple, and that's what I try and do. I really hope you guys found that useful. And if you have any questions, just hit me up on Telegram. You can join the channel and just ask the questions there. I'll be happy to help. Anyway, till next time, I hope you're doing well in trading and take care. Bye.